The trend levels indicator is a tool that helps traders identify when the market is ranging and avoid fake outs. It filters a market as a ranging market as long as the trend delta value is under 80%. This tool has proven effective in identifying sideways markets before price fluctuations. It not only shows when the market is bullish or bearish, but also tells traders when to stay out. The trend levels work by comparing the market's trend to a specific value, allowing traders to make informed decisions about their trades. This tool not only helps traders identify when the market is bullish or bearish, but also helps them stay out of bad trades. In this video, I'm going to break it all down: what this indicator is, how the trend levels indicator works, and how you can use them to filter out bad trades and trade with more confidence. Trust me, you will want to stick around till the end for this one. So if you happen to find value along the way, don't forget to hit the like button, subscribe, and turn on the notification button to get notified when we upload a new video. Now, let's get into it. To get started with this powerful indicator, the first thing you need to do is head over to TradingView. Once you've loaded up any trading asset on your preferred time frame, click on the Indicators tab and search for Trend Levels. What you're looking for is the version by Chart Prime. Make sure you select that one. The Trend Levels indicator by Chart Prime is designed to help you pinpoint key levels within a trend and measure the strength of that trend. But more importantly, it plays a crucial role in filtering out ranging or choppy markets, something that can really mess up your entries if you're not careful. And the best part? It's incredibly simple to use, yet packed with useful features. At the core of this indicator is a color-coded trend ribbon, a visual structure that includes a high-level line at the top and a low-level line at the bottom. The top line marks the highest price within the trend and often acts as resistance, especially in an uptrend. The bottom line tracks the lowest price and generally serves as support in a downtrend. Sandwiched between them is the midline, which often becomes a critical area for pullbacks or rejections. Next up are the trend shift arrows. These are your visual clues for when momentum flips. You'll see green arrows pop up when a bearish trend flips bullish, and purple arrows when the bullish trend shifts bearish. These arrows make it easy to recognize turning points without second guessing. Just above the chart, you'll also find a table showing the symbol you're analyzing. And one key metric we need to dive into: the trend delta. Even though the label simply says trend, this number is better understood as trend delta, and it's critical. In bullish trends, the delta shows what percentage of candles opened and closed above the midline. For example, a 92.19% delta means nearly every candle respects bullish momentum. In bearish trends like this one here, a 74.52% delta means the majority of candles opened and closed below the midline. The higher the value, the stronger and more reliable the trend. Ideally, you want to see delta values between 80% to 100% to increase your odds of success. Another feature that makes this tool so helpful is its dynamic candle coloring. In a strong bullish trend, candles turn bright green. In bearish trends, they turn purple. But if the market starts losing momentum, you'll see a gradient between the two, a visual warning that the trend is weakening and not a great time to enter trades. Those are zones to avoid. Before we jump into the strategy, let's quickly look at the settings. You can adjust the length, which defines the look-back period used to calculate the trend levels. You can also tweak the up and down colors and enable or disable components using the Silent tab. Once your setup is ready, hit OK, and let's move on to trading with this indicator. Now here's how to trade with it. Say you're looking to go long, there are 3 conditions you must check. Condition 1. Make sure the trend is clearly bullish. That means you need to see bright green candles staying above the midline. Condition 2. Wait for a 5-candle gap where none of the candles touch the midline. Then watch for the price to come back and retest the midline with a wick. This subtle retest is key. It signals potential continuation. If the wick touches the midline but closes above it, great. If a candle closes below, you want the next candle to close back above the midline. In this particular case, this was our pullback setup. After the pullback, check the trend delta. It must read above 80%, which tells us that during this uptrend, every candle opened and closed above the midline. That's your green light to enter the trade with high confidence. So for this setup, we take the long position at the candle close. The stop loss goes just below the low level line, and the take profit is set at 1.5 risk to reward ratio. As you can see, this trade played out beautifully. It hit target with strong trend momentum. This setup was valid because all the right conditions were met. The trend was clearly bullish, confirmed by the bright green candles. We had a 5-candle gap before a clean pullback with a wick touch, and the delta was at 100%. Now let's look at a short setup. The candles were purple, showing a clear bearish trend. Then we had a clean 5-candle gap before the price pulled back. The pullback candle touched the midline with a wick, and again, trend delta was at 100%. That tells us the trend is strong enough to push prices lower. We enter short, set the stop loss just above the high level line, and target 2 times the risk. Again, another profitable trade. Here's the kicker. By only trading when trend delta is at 100%, you're avoiding most of the messy, sideways price action. Ranging markets almost always show a delta below 80%, sometimes as low as 10% or 20%. This simple filter helps you avoid weak signals and focus only on strong, trending moves. Now, the Trend Levels Indicator by Chart Prime is a complete toolkit for visualizing key trend levels, assessing trend strength, and filtering out those dreaded ranging conditions. Go ahead and join our Telegram channel and get access to high-quality, expert-curated trade signals every single week. But that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently. So, click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned. I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.